Yes, sir.
So guys, here we go with the next example on leverage analysis. It is from November 2022 exam. Let's go ahead and read the question once. Yes, Renuka.
The following information is available for SS Limited. Profit volume PV ratio 30%.
Remember, PV ratio is nothing but contribution divided by sales. And you learn this in the chapter marginal costing as well in your cost accounting paper. And if PV ratio is 30%, then what is variable cost? It is 70% of sales. Then read further.
Operating leverage 2.
They given the operating leverage, or you can say DOL is given as 2 times. Next.
Then financial leverage 1.5.
So DFL or FL is 1.5
5
times. Then
loan 1,25,000 rupees.
so your company has borrowed rupees 1,25,000. That's a loan amount.
Yes. Then post-tax interest rate 5.6%.
Now guys, supposed to underscore or highlight, it's given post-tax interest rate is 5.6%. That means this is the interest rate after minusing the tax saving. You know, whenever you pay interest on loan, it is allowed as a deduction for taxation purpose. Yes or no?
Yes.
PGBP, right? Income tax. Therefore, what is given out is a post-tax interest rate, means the interest you actually pay on the loan, the interest rate, that into 1 minus T is equal to 5.6%. Point to note. That is the only crux in this sum, okay?
Yes.
They're going to post-tax interest rate 5.6%. Next.
Then tax rate is 30%.
30% tax rates coincidence same as PV ratio. Next.
Then market price per share MPS 140 rupees.
Market price per share rupees 140.
Price earnings ratio 10 rupees.
And
Sorry,
you all
10.
know that price earnings ratio is 10 times. You should know that price earnings ratio, the formula is there in the name of the ratio. Price earnings means market price per share is the numerator and denominator is what? Earnings per share. That's your PE ratio. Is given as 10 times. Next.
You are required to number 1 prepare the profit loss statement of SS Limited.
Next.
And number 2 find out the number of equity shares.
So 2 questions calculate the number of equity shares, right?
Yes, sir.
Also prepare income statement. Now please refer to the solution out there. The first working should be you are supposed to calculate the pre-tax interest rate. What is the interest you actually pay on the loan? Got it?
Yes, sir.
Yes, ma.
So post-tax interest given 5.6%. Tax rate is 30%. So pre-tax interest rate 5.6 divided by 17 to 100, 8%.
That's what they're given. To understand better, just refer to this, the handwritten note. We know the pre-tax interest rate, we don't know X, okay, or interest rate. That into 1 minus
T.
Tax rate, which is 0.3, the 30% 0.3,
Yes, sir.
the tax rate, close brackets, is equal to 5.6%. Or interest rate will be, it is 5.6 divided by 0.7. So how much you get? 8%. And that is the interest rate on the loan amount. Next, working.
Loan amount 1,25,000 and interest amount is 1,25,000 into 8 by 100, 8%.
That is all rupees.
10,000.
10,000 is the amount of interest you actually pay on your loan. Now, next step is we write down the financial leverage formula. We know financial leverage, or you can say DFL. What is DFL? Degree of financial leverage. It's all the same, which is equal to EBIT divided by EBT. And remember, EBT is nothing but EBIT minus interest, the denominator, right?
Yes, sir.
Now, 1.5 times equals EBIT, I don't know, but denominator is what? It is EBIT minus interest, which is EBT. So, EBIT minus 10,000. Now, when I solve this, how much I get EBIT?
We get EBIT 30,000 rupees.
As rupees 30,000 is your EBIT when you solve this equation. Is that fine?
Yes, sir.
Now, once you have the EBIT, you can use the operating leverage formula to find the contribution amount. Now, we know 2 times equals a contribution, which I don't know, but divided by EBIT, I know rupees 30,000. Now, what is 30,000 rupees into 2? 60,000 rupees is my contribution. Now, I know that the PV ratio, which is contribution divided by sales. Can we write this?
Yes, sir.
Please write this. PV ratio equals, right, PV ratio equals contribution divided by sales. Contribution divided by sales. If you want, you can write into 100, fine. But that is contribution divided by sales into 100 is your PV ratio. Yes or no? Now I can say that, therefore, sales equals contribution divided by PV ratio. That's it. No brainer, right? So it is going to be rupees 60,000 contribution we got divided by 30% PV ratio, 30%. How much you get? Works out to rupees 2 lakh. Can we go back to the printed? Yes. It is 60,000 by 30%. How much you get? Rupees 2 lakh is a sales.
Yes, sir.
Is it on the screen?
Yeah.
Yes, ma'am. Rupees 2 lakh is a sales. And we know that 2 lakh into 70% is a variable cost, right?
Yes.
Which is 1 lakh and 40,000. And now we have to make one more working to find the amount of fixed cost. Is that fine? So you find that on the screen, but let's write it down. Please write. Contribution minus a fixed cost is equal to EBIT. I repeat,
Yes, sir.
guys, contribution
Minus fixed.
minus fixed cost is EBIT. We know what is contribution.
Yeah.
It is 60,000.
60,000.
Minus a fixed cost.
We don't know.
We don't know. But we know EBIT how much?
Third.
It is 30,000.
Yeah.
We would have got EBIT, right? 30,000, right?
Yeah.
EBIT 30,000. So what is your fixed cost?
Yes, sir.
Will be 30,000.
30,000.
Have they shown that? 30,000 fixed cost.
Yes, sir.
And then we got the sales as how much? Rupees 2 lakh.
2 lakh.
And variable cost?
1,40,000.
1,40,000. Okay.
Yes, sir.
And they also found EBT earlier in the working, but not required. Anyway, you're going to make an income statement. Not an issue.
Yeah.
Now refer to the income statement. It is sales 2 lakh. Variable cost 1,40,000. Contribution 60,000. Less your fixed cost 30,000.
30,000.
EBIT
30,000.
30,000. And interest
10,000.
rupees are 10,000. EBT 20,000. They shown a working also for this.
Yeah.
And less
Tax 30%.
tax is 30%, rupees
6,000.
6,000 gone, right? And then your earnings after tax
14.
is 14,000 rupees. Have this in mind, okay? 14,000 is a profit or earnings or income available to the equity shareholders. Is that fine?
Yes, sir.
Anyway, no preference shares, no preference dividend, right? Now, I'll use a formula for price earnings ratio and try to find the earnings per share. Have they shown the working?
Yeah.
Price earnings ratio equals market price per share divided by earnings per share. Have they shown that?
No.
They haven't shown.
They've directly written
Straight away.
EPS.
No. You write this, guys. Please write. Price earnings ratio equals market price per share divided by earnings per share, or
EPS.
you can say earnings per share EPS equals market price per share divided by PE ratio. PE ratio is PER, right? Therefore, 140 rupees divided by 10. How much I get?
14
Rupees 14 is my earnings per share. Now, how to find the number of shares? Very simple. We know the formula for EPS. Have they shown the formula? Earnings per share equals, make a note,
Yeah.
it is a net profit after tax, earnings after tax. Is actually the real formula is what? Earnings available to equity shareholders, right?
Yes.
Here you can write earnings, no problem, EAT divided by number of equity shares. Therefore, now we know that rupees 14
EPS is
equals
equal
14,000 rupees by
to X.
number of shares, right? We don't know.
So which is equal to,
Have they shown that?
yeah,
14,000 rupees divided by 14,
1000.
I get 1,000 equity shares. Understood?
Yes, sir.
Okay, guys. You can say this sum is a combination of your leverage analysis and a bit of, ratio analysis, right? Where you have been asked to find using the P ratio, you're supposed to calculate earnings per share, and using the formula for EPS, find the number of equity shares. Is that clear? Okay, guys?
Yes.
So we are done with the solution, right?
Yes.
Here you go. Bye.
Thank you.